Hi students, good evening all of you and welcome back to my channel. And today we are going to discuss accounting standard 9 revenue recognition and one of the easiest important topic for CA inter advanced accounting. And let's move on to the standard AS9 revenue recognition. So in this case, first of all, the standard is dealing with only two topics, nothing but what is the timing of recording the timing of recording the revenue when we require to record the revenue, and another one is what is the criteria we have to consider for recording the revenue, under what situations we record the revenue, and at the same time timing when to record the revenue is covered under this standard. Okay. And coming to here, what is meant by revenue? What is meant by revenue? Revenue is nothing but gross inflow of cash or receivable by the entity by the entity, by way of sale of goods, or by sale of services, or by other means or by other means of resources in terms of interest, royalty, and dividend. In terms of interest, royalty, and dividend. And these five are only covered under AS9. So, gross inflow of cash received or receivable by the entity, either by way of sale of goods, and or by way of sale of services, or by other means of resources such as interest in the form of interest or royalty and a dividend, and these are only covered under AS9. These are only covered under AS9. And means, coming to the trading and profit and loss account, in trading account we only the revenue is nothing but what? Turnover, nothing but sales, either sale of goods or by sale of services. And in the profit and loss account, we have the other income. And coming to the other income, only these three topics are covered under the AS9. And the remaining related items are not covered here, and those are covered under another standard. Okay. And so revenue is nothing but what? Gross inflow of cash or cash received or receivable by the entity by means of what? Either by sale of goods or by sale of services or by other means of resources, nothing but interest, royalty, dividend, etc. Okay. And coming to the another one, for example, and whether AS9 covers all revenue and no. So coming to the scope of this standard, AS9 does not cover those revenue recognitions which are covered under another standards, which are covered under another standards. If revenue recognition related any particular item covered under another standard, and those are not covered here. And for example, AS7, revenue relating to the construction contract covered under AS7. So contract revenue, and that is not covered under AS9. And another one is AS12, and the revenue relating to the government grants, and those are specifically covered under AS12. And another one is leasehold related revenue covered under rental income covered under AS19, and either realized or unrealized gain on sale of PP or investment, sale of PP or investment, and or intangible assets, etc. Intangibles. Relating to the PPE, we have the topic in AS10, investment AS13 is there, and intangible assets AS26 is there. And another one, any foreign exchange gains we have, if any, and those are covered under what? AS11. Those are covered under what? AS11. And simply nothing but the revenue recognition relating to a particular item which are covered under another standards are not covered under what? AS9. Those are not covered under what? AS9. Okay, AS9 specifically includes particular item, and those are covered under the definition clearly mentioned. Revenue is nothing but gross inflow of cash received or receivable. So, by way of either by sale of goods or by providing the services or by means of other resources such as interest, royalty, and a dividend. Okay, and we'll discuss one by one. First, coming to the sale of the goods. And at the beginning of this standard, I told you the AS9 is relating to the timing of recording the transaction, and at the same time criteria based on which the transaction is recorded, revenue is recorded. So when we recognize the sale of goods and when we recognize the provide sale of services and coming to the interest, dividend and royalty also when we require to recognize, and those are covered here. And coming to the sale of goods, and sale of goods are recognized, sale of goods are considered in the books of account only when the following conditions are satisfied. Only when the following conditions are satisfied. That is nothing but if the property in goods completely transferred to the buyer, property in goods is completely transferred to the buyer, and all significant and risk and rewards relating to the goods are transferred to the buyer. All significant risk and rewards relating to the goods are transferred to the buyer, and no control of ownership on the goods lies with the seller. Seller didn't hold any control over the respected product. And the last one is no uncertainty exists regarding recovery of the amount from the buyer. If these conditions are satisfied, first one is if the property in goods are completely transferred to the buyer, and second, property in goods are nothing but, and in Sale of Goods Act, we have the two words property in goods and property in possession. And property in goods means what? So both ownership and possession both are transferred. Ownership and possession both are transferred. And significant risk and reward relating to the goods are also transferred to the buyer. The risk relating to the product completely transferred to the what? Buyer, and no control of ownership held by the seller over the respected product. And the control of ownership over the respected product should be completely transferred to the buyer by the seller. And one of the most important point is no uncertainty exists regarding the recovery of the amount from the buyer. And it means so there must be a certainty regarding the recovery of the amount. If any doubt we have regarding the recovery of the amount from the buyer, and if any risk we have regarding the recovery of the amount from the buyer, and remember, sale of goods and revenue cannot be recognized. Revenue cannot be recognized. For example, X Limited sold goods to Mr. A for rupees 1 lakh. For rupees 1 lakh on 1/4/2026. On 1/4/2026. Then the question is on 1/4/2026 shall Excel Limited record the transaction as a sale or not? Only if these four conditions are satisfied, then he can recognize the transaction as a sale. For example, on that day, after transferring the possession of the good, Excel Limited came to know that Mr. A is suffering from some financial issues and we have a risk regarding recovery of the respected amount. We have a risk regarding recovery of the respected amount because that party is under financial distress and that party is suffering from some financial issues. So in that case, shall X Limited record the transaction as a sale? The answer is no. Because on the date of transaction, so there is a uncertainty regarding recovery of the amount. Then the question is when he will record the transaction? Only when so that uncertainty resolved. Only when that uncertainty resolved, he can record the transaction or on receipt basis they can record the transaction. On receipt basis they can record the transaction. So for example, so on 5 5 2026 on 5/5/2026 that uncertainty resolve uncertain resolved means Mr. A win a court case, he got the amount and he clear all his financial issues, so our doubts are also resolved. So on 5/5/2026 that party win the case and he got the amount. So on 5/5/2026 we can recognize the transaction as a sale because there is no uncertainty regarding the recovery of the amount on that day, or when the amount we received we have to record. Then what about the respected transaction from 1/4/2026 to 5/5/2026? In between these days, X Limited is required to be considered and is not recorded the transaction as a sale. He has to show the goods as their own product, as goods lying with the customer, as their own product. Under the stock, he has to show it as goods lying with the customer till the recognition of the revenue. Till the recognition of the revenue. Okay. So, coming to the sale of the goods is recognized only when the four points are satisfied. One is property in goods completely transferred to the buyer, and significant risk and reward relating to the goods are transferred, and no control of ownership lies with the seller, and no uncertainty exists regarding the recovery of the amount from the buyer. Okay, and second one, coming to the sale of service. When we recognize the revenue relating to the sale of services or providing the services. And in this case, revenue is recognized only when the service is provided, only when the service is provided and no uncertainty exists regarding recovery of the amount from the receiver of the service. From the receiver of the service. No uncertainty exists. Service has to be provided. Service was provided and no uncertainty exists. And if these two conditions are satisfied, then we can recognize the transaction as a service, sale of services. We can recognize the revenue. And another one, in case of services, coming to the recognition of revenue relating to the services, generally we have the two models. And one is a percentage of completion method and another one is a 100% completion method. 100% completion method. And percentage of completion method we followed means what? When you have a continuous services with the one party. If you when you have a continuous services with the one party, then we follow the percentage of completion method. And when we have one-time service with one party, for example, coming to the installation and TV repairman is there, and our TV was not worked properly, and we called to him. He came to our home and do the repair of the respected TV and collect the amount. That is a one-time service. Once the service is completed, we pay the amount. So in that case, we follow 100% completion method. In case of the repairs or in case of any maintenance services, etc. But in case of continuous services, same For example, AMC services are there, annual maintenance services. And so, for example, coming to our ACs, and our institute is having the number of ACs, and all ACs or contracted maintenance services is given to one party, and that party will come to the institute periodically and will check each and every AC, and will do the repairs or will do the services to the respected AC, and on the particular day periodically they put a bill to the management and collect the amount, and they are providing the services continuously to the institute. In that case, so percentage of completion method is followed. So in case of providing the service continuous supply of services are there, then we better to follow percentage of completion method. And in case of one time service, like repairs and maintenance, transportation, conducting an event, these are all what one time services. And once the event was over, then we have to pay the amount, and then only we can they can recognize the revenue. And in case of continuous services like AMC of ACs of an organization, and even in case of a teaching also continuous service, for example, you pay the amount as we are providing the teaching for around 6 months. And for example, if you pay the amount, we segregate the amount on monthly basis. Say for example, 6,000 you pay, and on monthly basis I recognized it as 1,000, 1,000, 1,000 over 6 months. So these type of services, and based on the percentage of completion I have to recognize the revenue. Okay. So, and normally relating to the revenue relating to the services are recognized either based on percentage of completion method or 100% completion method. And in case of continuous supply of services, we follow generally percentage of completion method. But in case of one-time services, generally we follow what 100% completion method. 100% completion method. And this is relating to what sale of services. And another one is in case of others, like what interest and royalty, dividend. And in case of interest, revenue is recognized based on time proportionate. Revenue is recognized based on time proportionate. We recognize it based on time proportionate. On time proportion, we have to consider. For example, if the company is having a policy to pay the interest on monthly basis or on quarterly basis or off yearly basis, as an investor, we recognize the revenue based on the policy of the company. So you may recognize based on the amount you received or on time proportionate. For example, you made an investment in the you deposited the amount in the bank. So on at the end of the every month, sometimes banks will provide the interest on monthly basis, sometimes banks will provide the interest on quarterly basis, and based on the time proportionate we will recognize it in our books of accounts, interest on savings account. Okay. And coming to the royalty, for example, I wrote a book relating to the accounting, and that book will be published through one person. So for example, one book is noted by me, and through the publisher I am publishing the book. So and the publisher will sell the book and collect the amount. Out of that, publisher will pay some percentage of commission to me, and say for example 10% of the price is given to me as a royalty, 10%, and that royalty will be provided throughout the year. And these are recognized on what basis? Accrual basis. On what basis? Accrual basis will be recognized. So royalty is recognized based on accrual. On accrual basis means what? In subjected to the agreement, subjected to the terms in a agreement we have to consider. And coming to the dividend. So in case of dividend, for example, how the company provide the dividend to the shareholder. to the shareholder. First, in case of company, board of directors propose the dividend first, and the later shareholders declare it at the general meeting by confirming the proposal of the board of directors, and after that, company pay the dividend to the shareholder. For example, say on 1 5 26, company announced the dividend. Board of director proposed the dividend. On 1 15 5 26, shareholders declare it. And on 30th 5 26, company pay the amount. In that case, when the shareholders declare the dividend, when the shareholders of the company declare the dividend, in that case, shareholders got the right to receive the dividend, right to receive the dividend. So remember, the right to receive the dividend is established to the shareholder only when the proposed dividend was confirmed by the shareholders at the general meeting called as declaration of the dividend. So on the day only, shareholder can recognize it as a income. So shareholders shareholders recognize it only when right to receive the dividend has been established. Only when what? Right to receive the dividend has been established. When the right to receive the dividend has been established, only when the shareholders declare the dividend by confirming the proposal of the board of directors at the general meeting. Nothing but in this case, 15th May 2026 is the date of recognition of revenue in the books of the shareholder. In the books of the shareholder. Okay. And so these are the 3 points. So one is sale of goods we discussed, and sale of services we discussed. Other means in terms of interest, royalty, and dividend, and those are we discussed. And one of the most important point, if any uncertainty exists, if any uncertainty exists regarding the recovery of the amount, regarding the recovery of the amount, then the question is when that uncertainty exists, when that uncertainty created. For example, if the uncertainty exists on the date of recognition of revenue, on the date of recognition of revenue. For example, we sold the product to Mr. A. So to Mr. A, and after transferring the possession of the goods, we came to know that that party is suffering from some financial issues, and that party is suffering from some financial distress. So, and how can we recognize it? Because for recognition of the sale of goods in our books of accounts as a revenue, one of the point has to be satisfied is nothing but no uncertainty exists regarding the recovery of the amount. No uncertainty exists regarding the recovery of the amount. But here, on the date of recognition of the revenue itself, you know that factor. So there is an uncertainty. Some risk factor is there regarding the recovery. So we don't know whether amount will come or not, will be received or not. In that case, what the standard says, don't recognize the revenue. Don't recognize the revenue and postpone it to the future date. Postpone it to the future. What is the future date? When that uncertainty, when that uncertainty resolved, when that uncertainty resolved. Okay, and another one. For example, if the uncertainty creates after recognition of revenue, if uncertainty creates after recognition of revenue, means what? Already I recognize the revenue. Already I recognize the revenue. Means I wrote the journal entry for sale of the goods, like debtor account debited to sales. On 1/4/2026, I wrote the entry. Debtor account debited to sales. And after some period, say after 1 month, I came to know that that party is suffering from some financial issues. And shall I cancel that entry what I recorded previously? And no. So, if any uncertainty creates after recognition of revenue, the first important point is don't cancel that revenue entry recorded previously. Recorded previously. Then create provision for bad debts to the extent of uncertainty. Provision for bad debts to the extent of what uncertainty. Then means what? For example, on 1/4/2026, I recognize the revenue. Nothing but what? Debtor account debited to sales account I recorded. Debtor account debited to sales account I recorded. For example, on 15th 5/26, I know that debtor is under financial issues. Debtor is under financial issues. Then the question is, shall I cancel this? No. So you need to create what? Provision. So provision is to be created. Provision is to be created. So then we write the entry what? So provision for, then we write the entry what? So profit and loss account debited to provision for bad and doubtful debts. Profit and loss account debited to provision for bad and doubtful debts. And this provision for bad and doubtful debts is shown as a reduction from the debtors in the balance sheet. Reduction from the debtors in the balance sheet. And here, in this case, for example, if uncertainty exists on the date of recognition of revenue, say on 1/4/2026, XYZ Limited sold goods to Mr. A for rupees 2 lakh. And while recording the transaction of sale in the books of XYZ Limited, he came to know that Mr. A is suffering from some financial issues. So then, no sale entry is recorded. No sale entry is recorded. Then, till the recognition of revenue, for example, say that uncertainty will be resolved on June, in the month of June. Then, till the end of the month of the June, where to show the respected goods and how to consider the respected goods. And these goods, what we sold to Mr. A, shown as stock lying with stock lying with customer in the books of XYZ Limited till that uncertainty is resolved. And once the uncertainty resolved, then we can write the sale entry. We can write what? Sale entry. Okay. So we'll do some problems. Okay. For example, coming to here, second problem. AB sell the goods to CD on 1st March 2000 X1. CD is having significant cash flow issue since the last few months. However, it is trying to raise the funding through the bank loan to be able to run its operations in the future. On 5th May 2000 X1, CD is able to seek the funding and is expected to be able to pay for the goods in future. At the time of sale, it is difficult for AB to ascertain whether it will be able to collect the amount from CD due to the poor financial condition. Means what? On the date of sale, AB don't know whether amount able to recover it or not. So there is an uncertainty exists. In that case, on 1st March 2000 X1, so don't recognize sale. Don't recognize sale. But AB confirmed that that party will the party was applied for loan and he will get the loan on 5th May. So on 5th May, he will get the amount and he will pay the amount to us. So on 5th May, recognize what? Revenue. Recognize what? Revenue. In between that, 1st March 2000 X1 to 5th May 2000 X1, we have to show the goods as stock lying with. customer. Stock lying with customer. So we can recognize the revenue only on 5th May 2000 X1 because uncertainty exists on the date of recording the transaction. And third one, AB sell the goods to CD Limited on 1st January 2000 X1 for 2 lakhs. After sale was made, CD is having significant cash flow issues. It is trying to raise the funding through the bank loan to be able to run its operations in the future. However, it is unable to do so and has gone under liquidation under on 15th March 2000 X1 on 1st January 2000 X1 while we sold the goods. So that party is not having any financial issues. And after we recognize the sale on 1st January, we note the entry CD account debited to debtor account. But after they clearly mentioned here also at the time of sale, there was no reason for AB to believe that so it will not be able to collect the amount from the CD in future. So we recognize the sale on 1st January we wrote the entry, sorry, CD to sell 2 lakhs. CD to sell 2 lakh. After that, that part we came to know that that party is suffering from some financial issues. So we have to create what provision for bad debts. Then we write the journal entry. So first on 1st January we recognize the revenue. CD account debited to revenue. Then 15th March we treated it as a bad debts. So bad debts account debited to CD. Why we consider it as a bad debts? Because that party became bankrupt. Correct? That party became what bankrupt undergone what liquidation, so we unable to collect the amount in future. That's why we treated it as a bad debts. Otherwise, so we consider it as a provision. We have to create what provision for bad debts. Okay, next. So that is the one. And coming to the fourth problem, and during the year ended 31st March 2000 X1, ZX Enterprise has recognized 100 lakhs on accrual basis income from dividend on units of mutual fund held by it, and the dividend on mutual fund were declared on 15th June and the dividend proposed on 10th April. And remember, relating to the dividend, dividend is recognized in the books of account when the right to receive the dividend established to the unit holder or shareholder. But here the right to receive the dividend established only when the dividend was declared. The dividend is declared on 15th June. So on 15th June, they can recognize the transaction as a revenue. So the recognition of 100 lakhs will be right to receive the dividend has established on 15th June. The recognition of 100 lakh on accrual basis, but the party record the transaction on what basis? Accrual basis. That is not allowed as per AS9. Only right to receive the dividend established, then only they can recognize it as a dividend revenue. Next. And Y Limited used certain resources of X Limited. In return, X Limited received 10 lakhs and 15 lakhs as an interest and royalty respective from Y Limited during the year X1 to X2. You are required to state whether on what basis these revenue can be recognized. General interest is recognized on what basis? Time proportionate. And royalty is recorded on what basis? Accrual basis and with subjected to the terms of the agreement. With subjected to the terms of the agreement. Okay. And so hmm, seventh question. A claim lodged with railways in March 2000 X1 for loss of goods of 2 lakhs had been passed for the payment in March 2000 X3 for 1 lakh 50. No entry passed in the books of company when the claim was lodged. Advice P Limited about treatment of for following in the final accounts of the final statements of the accounts for the year ended 31st March X. And first of all, actually we applied for the claim in March 2000 X1 for 2 lakh. Maybe that party is not having the so guarantee regarding the recovery regarding the how much amount of claim is lost. There is no certainty regarding the recovery of the amount, so collection of the respected amount. How can we say? Because the payment sanction, the claim was sanctioned only 1,50,000. And on the date of applying for the insurance, they don't know exactly how much amount will come. So that's why they didn't record the transaction because there is an uncertainty regarding the recovery in the year 2000 X1. So the very uncertainty don't recognize the revenue. Then when the amount received, when the amount received in future, or when the uncertainty resolved in future, then recognize the revenue. When the amount received in the month of March 2000 X3, that's why they record the transaction as a revenue in the month of March 2000 X3. Okay, and here and along with AS9, also here we can apply AS5. Net profit or loss for the period, prior period item, changes in accounting policy. And what he said, in the year 2000 X1, we apply for the insurance claim, but no entry is recorded in the year 2000 X1. And based on that, don't say it is a prior period item. It is a prior period item because so without having the certainty, without having the conformity, we can't recognize the revenue in the books of account. So revenue will be recognized only when there is no uncertainty. So that's why in the year 2000 X1 they didn't record. And only when the cash payment received or no uncertainty exists, then only they record it. So this is not considered as a prior period item. But as per AS5, these type of items better to consider it as exceptional, ordinary but exceptional in the nature. Ordinary but exceptional in the nature, we have to recognize and is required to be disclosed separately. Okay, next. Okay, so these are the one. And one more important point in AS5, nothing but some special cases we have. Some special cases we have. And coming to the first one, principal and agent relation. Principal and agent. So principal agent. In this case, for example, Mr. Abhi order the food, order the food from, for example, Southern Spice restaurant. Order the food from Southern Spice restaurant and through the Zomato. Then the total value, and the restaurant collect the amount, say 250 rupee. And delivery charges, one amount is collected called as delivery charges. They collected say 30 rupee, and some GSTs also will be collected. So say for example 20 rupee, and the total amount collected 300, and this amount will pay to the Zomato. This amount will pay to the Zomato. Then the question is, Zomato will recognize the total 300 as a sale. The answer is no. The answer is no. Zomato cannot consider total amount as a sale. So here 250 rupee, 250 rupee, so recognized by Southern Spice restaurant, 30 rupee only recognized by Zomato. 30 rupee only recognized by Zomato. And this 20 rupees are transferred to the government. Whoever collected later will pay to the government. That's why no one will consider it as a revenue. So, and here the person, if anyone supply the goods through the agent, then agent has to recognize only to the extent of their commission as their income, as their revenue. And the remaining amount will be the revenue to the principal only. The actual value of the service or actual value of the product is revenue to the principal, not to the agent. Agent's revenue is only restricted to the commission or delivery charges or site charges, etc. For example, if you book the ticket through the Book My Show for a movie, then they collect what? Actual movie ticket price is say for 200 rupees, and they collect 30 rupee as a site charges. So and total 230 along with GST. So total, for example, 250 rupee they collected. And here Book My Show will consider only 30 rupee is the revenue. And the remaining 200 rupee will be the revenue to the theater, not to the Book My Show. Not to the Book My Show. Okay. Then, second. Then we'll see one problem here. So here Jigato runs a food delivery business, and as per the arrangement, Jigato allows customer to order the food from the local restaurant and is responsible for delivery of the food within the stipulated time. During a particular year, it collect the money on orders made online as well. So total price of the food item 200 lakh, delivery charges 660 and GST. Here 200 lakh is the restaurant revenue and Gigato, so revenue is 60 and this 40 lakh will be revenue to the government. Okay. Gigato received 300 lakh from the above order and orders were delivered to the customers in stipulated time. How much revenue should be recognized by restaurant? 200. How much revenue recognized by Gigato? 60. And the remaining 40 will be the transfer to the government. Okay. So this is the one. Gigato will recognize only 60. Revenue of restaurant is 200. Next. So coming to the second one. So bill and hold model. Bill and hold model. What is meant by bill and hold model? For example, XYZ Limited, one company is there, and Mr. Abhi purchased the goods. He purchased the goods for rupees 2 lakhs. For rupees 2. Over the phone call, Mr. Ravi called to the XYZ Limited and he wants to purchase the product 2 lakh and the total payment made by the party and XYZ Limited arranged that package and the total 2 lakh worth of the goods are properly packed by the XYZ Limited. He readily put the respected product for delivery. For delivery. And Mr. Ravi told, I will come and hand over the product. But due to some emergency, Mr. Abhi go outside. So he is not available in the city. So in that case, Mr. Abhi called to the XYZ Limited. Sir, I transfer the amount and the total payment is over and I will hand over the product. But at present, I am not available in the city. I will come after one week and will hand over the product. And till that, please hold the products at your premises. Please hold the product at your premises. And here what happened? Here the goods hold at the request of the buyer. At the request of the buyer. And another one, the goods are properly packed by the XYZ Limited and don't no more we transferred to XYZ, no more transferred to the another sell another buyer. And no more transferred to another party. No more transfer to another party. And goods are readily available for what? Delivery. Goods are readily available for what? Delivery. And this is called as what? Bill and hold model. In that case, when we recognize the revenue, when the goods are readily available on that day, on the date of sale itself, we can recognize and no need to wait for the weekend. So no need to wait till the handover of the product by the buyer. For example, the products are purchased on 1/4/2026 and this party hand over the goods on 15/4/2026. Then when we recognize the transaction as a sale on 1/4/2026 itself, we recognize the transaction as a sale because that goods are hold in the XYZ limited premises at the request of the buyer only. If any loss happened in the premises of XYZ Limited and that goods related loss will be borne by the Abhi only, not by XYZ Limited. Okay. And coming to the third one, sale or approval. Sale or approval basis. And on return policy basis, if any goods are transferred, those are covered under what? Sale or approval basis only. And sale or approval basis, in case of sale or approval, when the goods recognized, when the transaction is recognized as a sale, and only when the sale is confirmed by the buyer or after completion of specified tenure. After completion of specified tenure means what? For example, I sold the products to Mr. Abhi. I sold the products to Mr. Ravi. I told him, and there is a return policy. Within 10 days, you may return the product. Within 10 days, you may return the product. For example, on the second day, he called to me and no more returns to you, and I will accept the respected product. Then I can recognize the transaction as a sale. For example, that party will not call to me in the next 10 days, and in the next 10 days, then 10 days return policy is over. Then on the next day, on the 11th day, I can recognize the transaction as a sale. And when the transaction is confirmed by the buyer or after completion of the tenure specified for the return policy, and we can recognize the transaction as a what? Sale. And another one, if the goods are subjected to the installation or inspection, if the goods are subjected to the installation or inspection, okay, in that case, for example, if the installation is very easy to anyone, is very easy to anyone, installation is very easy to anyone, in that case, revenue is recognized on the date of sale itself. Revenue is recognized on the date of sale itself. For example, small things are there. For example, we purchase the refrigerator. We purchase the refrigerator, fridge. We purchase the fridge, and fridge related generally no installation work we have. Just we brought the fridge to the home and put at the required place, and we just the no more separate installation we require, and that installation is very easy. So in that case, no need to wait for the technician, so we can consider it as a sale, and it means shopkeeper consider it as a sale once the product is delivered, once the product is hand over to the buyer. But one more point is, if the installation work is complex, if the installation work is complex, in that case, if the installation work is complicated or complex, for example, relating to the AC, if I purchase the AC, shall I install it? And then no, because some installation process is there which is not allowed to do by the customer, and technician must and should come to the home and will install it. So that type of complex works we have. In that case, two options we have. If the product is accepted by the buyer before installation, the product is accepted by the buyer before installation, or if the product is accepted by the buyer after completion of installation only, after completion of installation only. In that case, if product is accepted by the buyer before installation, before completion of the installation, then sale is recognized immediately on the date of sale, and the revenue is recognized immediately on the date of sale, but only to the extent of sale of goods. But coming to the installation fee, revenue is recognized only after completion of the installation. Only after completion of the installation. But in this case, if the product is accepted by the buyer of completion of the installation, in that case, sale of goods and installation fee are recognized only after completion of the installation. Only after completion of the installation, that too that is accepted by the buyer. That too that is accepted by the buyer. So 3 points we have. If the installation is very easy to anyone, then sale of goods is recognized immediately on the date of sale itself, and revenue is recognized immediately on the date of sale itself. If the installation is complex, then if the product is accepted by the buyer before completion of the installation, then sale of goods related portion revenue is recognized immediately on the date of sale, but installation fees is recognized only after completion of the installation. But if the product is accepted after completion of the installation, then both the sale of goods and installation fee both are recognized only after completion of the installation. We have one classic example for this for this point. We'll see, and here is the one. For example, for the year ended 30 for the year ended 31st March 2000 X1, KY Enterprise has entered into the following transactions. So on 31st March, KY supplied two machines to the customer. Both machines were accepted by ST on 31st March. Both are accepted. Machine one was Machine one was a machine that was routinely supplied by KY to many customers, and installation process is very simple. But machine was installed on 2nd April by ST's employees, and machine 2 is being more specialized in nature, require installation process which is more complicated and require significant assistance from KY. But machine 2 was installed in between 2nd and 5th April. Details of below. And here machine 1 related installation is very simple. So we can recognize the transaction as a sale on the date of sale itself. Nothing but on 31st March itself we can recognize it. So coming to the machine 1, so sale of the product 3,20,000, cost of the production 1,60,000, and the total 1,60,000 considered as a profit. 1,60,000 considered as a product. But coming to the machine 2 related installation process is more complicated. Is more complicated. In that case, you need to check whether the product is accepted by the customer after completion of the installation or before completion of the installation. And they clearly mentioned both products are accepted on 31st March. Both products are accepted on 31st March itself. So means the product is accepted before completion of the installation itself. In that case, we have to recognize the transaction as a sale on the date of sale itself. So 3 lakh and 1,50,000. So 1,50,000 is treated as a profit. But remember, installation fees at 10,000 is recognized only after completion of the installation work. Nothing but in between 2nd and 5th April when the installation work was over. Okay. So this is the case. In case of machine 1, 1,60,000. In case of machine 2, we can recognize 1,50,000, but remaining amount 10,000 is recognized only on 5th April. Okay. I hope you understood. Next up, fourth one, sale and repurchase agreement. For example, XYZ Limited and ABC Limited is there, and XYZ Limited sold the asset for 5 lakhs, and ABC Limited again from the ABC Limited, XYZ Limited again repurchase the same product, purchase it for 6 lakhs. XYZ Limited sold the product to ABC Limited for 5 lakhs, and ABC Limited sold the same product again to the XYZ Limited for 6 lakhs. So this type of transactions are covered under what? Sale and repurchase. And first of all, and remember, shall XYZ Limited consider the transaction as a sale and consider the another second transaction as a purchase? The answer is no. And first of all, these type of transactions are not considered as a sale transaction. There is no sale transaction, and these are treated as finance agreement. These are treated as finance agreement. And the difference between sale price and purchase price and sale price, how much amount is the 1 lakh, is called as what? Finance cost. Nothing but what? Interest. Nothing but what? Interest. So No sale entry, no purchase entry is required to be recorded in the books of XYZ Limited or ABC Limited. So, what are the entries they recorded? They noted it as bank account debited to loan account, bank account debited to loan account, and interest account debited to loan account 1 lakh, and loan account debited to bank when the amount is paid 6 lakh. In that way, they will record. So no more sale transaction, no more purchase transaction we recorded. Those are recorded as a simply a finance agreement. Okay. Next. I hope you understood. Consignment sale. In case of consignment sale, what happened? And consignor sell the goods to the customers through the consignor. Through the consignor. And remember, when the consignor recognizes the transaction as a sale, only when goods sold by the consignee to the customer, not when the goods transferred to the consignee. So when the goods transferred by consignor to the consignee, only possession is transferred. But coming to the sale definition, property in goods is required to be transferred, not property in possession. So only when the goods sold by the consignee to the customer, then only the property in goods have been transferred, and then only the sale transaction is recognized by the consignor. Okay. And another one. So coming to some advertisement services. In case of advertisement services, so when we recognize when the advertising agency considered as a sale, only when that advertisement appears before the public. For example, this is the IPL season. So in the month of April, in the month of March, IPL was started. For example, in the month of the January, you gave the advance to Geo Hotstar. So say around 10 crore for providing your company related advertisement. And in the month of January, they didn't recognize the transaction as a advertising services. They didn't recognize any revenue recognition in their books of account. They consider it as an advance. And when they consider it as a revenue, only when it appears. For example, today your advertisement appears to the public, then today they will consider it as a sale. When it is appeared before the public, then only they consider it as a sale. Okay. Next, another one, insurance agency commission. In case of insurance agency commission, the revenue is recognized only uh, only after the effective date of the policy, or effective date of the policy, or effective date of the renewal of the policy. After that only they can recognize the transaction as a revenue. And another thing, in case of trade discount, and remember, trade discount is reduced from the revenue because it is provided at the time of supplying the goods, or at the time of providing the service. But cash discount is not reduced from the revenue, because cash discount is not relating to the sale of the product, not relating to the sale of the service. It is relating to the collection of the amount from the customer before the due date. If you want to collect the amount from the customer before the due date, then we provide some discount, and that for prompt payment, whatever the discount we provided, and we call it as cash discount. Cash discount is reduced from the total amount payable, not from the revenue. But trade discount is for promoting the sale of the product, and that is provided at the time of sale of the goods or providing the service. That's why we reduce it from the revenue. Okay, then we'll see some problems. And here, On 15th November, goods worth 5 lakh were sold on approval base, sale or approval. The period of approval is 4 months, after which they were considered sold. Buyer sent approval for 75 percentage of goods sold up to 31st January and no approval or disapproval received for the remaining product till 31st March. So means 15th November to 4 months. And 15th November means 15th December, 15th January, 15th February, 15th March. So after 15th March, we consider the transaction as a sale. So on 31st January, they consider 75% part as a revenue. What is the 75%? 5 lakhs into 75%. How much? 3 lakh 75. So on 31st January, they consider it as a revenue. And on 16th March, after completion of the 4 months, immediately they can recognize the transaction once no approval, no disapproval is received from the customer. So for remaining product of 25,000, nothing but 1,25,000, and they consider the transaction as a revenue on from the 16th March onwards. Okay, because on 15th March the total 4 months was over. Next. On 31st March, goods worth 2,40,000 sold to Bright Limited, but due to the refurnishing of their showroom being underway, on the request, goods were delivered on 10th April. These are bill and hold model, and goods are remains at the seller premises at the request of the buyer. So the revenue is recognized on 31st March itself, rupees 2,40,000. Next, Rainbow Limited supplied goods worth 6 lakhs to Shyam Limited and concurrently agrees to repurchase the same goods on 14th April. And first of all, it is not a sale transaction. This is the finance agreement. And the difference between, so here the repurchase price is not given. If repurchase price was given, difference between sale price and repurchase price is treated as a interest or finance cost. Right. Dio Limited, under certain assets of Rainbow Limited, Rainbow Limited used certain assets of Rainbow Limited. Rainbow Limited received 7.5 lakh and 12 lakh as interest and royalty. So interest is on time proportionate and royalty is on accrual basis. We have to consider. And on 25th December, goods 4 lakh was sent on consignment basis, of which 40% of the goods unsold are lying with consignee at 31st March. Means 40% unsold. Means 60% sold by the consignee. So 4 lakhs into the 60%, 2 lakh 40,000 worth of the goods related product is treated as a sale in the books of the consignor, and the remaining 40% we have to not considered as a sale, and we have to treat it as stock lying with consignee. Okay, next 10th is over, and coming to the ninth, same some situations we have, and goods sold on 20th March, but at the request of the buyer these are delivered on 10th April. We have to recognize the sale only on 20th March because goods are lying at seller's premises at the request of the buyer. On 15th January, goods of 1,50,000 sent on consignment basis, 20% goods are unsold. Means 80% was sold. 80% stands for what? 1,20,000. 1,20,000 considered as a sale. And 1,20,000 worth of the goods are sold on approval basis on 1st December. Period of approval is 3 months. Means what? December, January, February. So 3 months afterwards, they are considered sold. Buyer sent approval for 75%. So on 31st January. So here December, January, February. And before the 3 months, they sent the approval for 75% only. 1,20,000 into 75%. 90,000. They consider it as a sale on 31st January itself. On 1st March itself. That means after completion of 3 months. From the 1st March itself, they can recognize the sale for remaining 25% also. Because no approval, no disapproval sale. Apart from the above, company made cash sales of 7,80,000. Trade discount 5% is allowed. And here 7,80,000 trade discount is reduced. So 7,80,000 into 95%. 7,41,000 only treated as a sale. Okay. 7,41,000 is treated as a sale. Okay. Next, coming to the eighth problem. GH manufactured sell the television. The televisions are shipped to the customer by sea. In order to transfer the risk related to the shipment of the televisions, GH also gets insurance coverage for the goods while they are in transfer from the factory to the customer location. Insurance policy will reimburse GH for the value of goods in the event loss or damage arises any time up to these goods reaching the customer's location. Means what? Before reaching the customer's location, the entire control lies with the GH manufacturers only. So the legal title passes when the goods arrived at customer premises 1 month later. And when should entity GH recognize the revenue? Only when the goods reaches the customer's premises. Okay. And customer's premises. Okay. Next. So this one is over. Coming to the sixth one, and this is important. And the board of directors decided on 31st March to increase the sale price of certain items retrospectively from 1st January 2000 X2. In view of this price revision, with effect from 1st January 2000 X2, the company has to receive 15 lakh from its customer in respect of sales made from 1st January to 31st March. And in case we give the price fluctuation, increase in price impact is provided retrospectively. From the 1st January to 31st March, we have to recognize additional sales of 15 lakh. When we recognize that 15 lakh, only when you have a certainty regarding recovery of the amount. If any uncertainty arises, don't recognize the amount as a sale. Just to give the disclosure in notes to accounts, we unable to recognize the transaction as a sale because we are not confirmed regarding recovery of that amount regarding so and so reason. Okay. So 15 lakh from the customer. So if the company is able to assess the ultimate collection is reasonably certain, then they can recognize the transaction as a revenue. And if the company is not reasonably certain on ultimate collection, in that case, it shall postpone the recognition of revenue. Just give the disclosure in notes to accounts as per AS1. So these are completed. Okay. So yes, this is over. So AS9. And one of the important and easiest standard, if you observe only 3 points, sale of goods, sale of services, and interest, royalty, and dividend. These points only covered here along with some special cases. Okay, I hope you understood and enjoy the, so I hope you enjoy the video, enjoy the lecture. And if you are new to my channel, please subscribe it and also share it to your friends. And if you like the video, please press the like button. And I will upload this PDF and problems also will be uploaded in my Telegram channel. And the Telegram channel will provide in description box and also even in the comment box also. So if you want to download it, then please follow the Telegram channel and you can also reach me. And if you have any doubts, you can ask me in Telegram channel or you may ask me in comment box also. Okay, take care, bye bye. And next we'll meet with another standard. Okay, thank you.